Hello there, I am Ariana Hunter for Su Casa Su Castillo. And today we're going to be talking in the segment of insurance. We're going to be talking about gap insurance. It's something I talk about all the time with young people who don't understand how the gap insurance work in the cars, for their cars. Basically, it's very simple. Let's say that you pay $20,000 for your vehicle. Somebody hits you today. Their insurance company are gonna pay you what the car value holds today. And let's say based on the mileage you put on your car, and they look it up in the blue book, your car is worth only $10,000, and that's all they're gonna pay you, the $10,000. It doesn't matter if you still owe, say you owe $18,000. So now, who's gonna pay this $8,000? That's what gap insurance is all about. It will take effect immediately. Of course, for you if you have it yourself. What is gonna happen is gonna cover the insurance. It's gonna cover the amount of the balance you owe on the car, on that loan itself. So those $8,000, the $10,000 that your insurance company is gonna pay the owner of the car, which is happen to be the loan owners, which is the bank or the credit union. So they're gonna give it the $10,000, and now there are $8,000 remaining. Then your insurance company is gonna pay them the rest if you have the gap insurance. It's additional insurance that you purchase in addition to the insurance you have. It's not automatically covered, and it's something you have to purchase, but it's not very expensive. If you buy it when you're purchasing the vehicle at the dealership, it's super expensive. They could sell it to you for $3,000, and you could actually buy it for $300 in the actual credit union or bank if you buy your loan directly from them. You go to the branch itself and do it through them, or you do business directly with the bank or the credit union, not the dealership, because they tell you that all the time. The dealership tells you, we have the same product, we're going to give you the same interest, it's going to make it super easy. Easy is going to be difficult for that amount of 5 years or 4 years, whatever you have financing your vehicle. So don't take the easy route. Work a little bit at the beginning, and you're going to have an easy time the 5 years or 4 years you're financing your vehicle. Don't do this to yourself. Don't give away money, okay, like that. The gap insurance you could buy if you already have your car and you don't have it now. You could buy it from your provider, either Geico, Allstate, USA, whoever you have as an insurance provider. You could buy this. It's a few dollars a month. It's not very expensive, and it gives you a peace of mind in case this should happen to you. It protects you financially. It depends on the vehicle you have. Most importantly is when you're young, you tend to pay high interest rate on the vehicle. What it translates to is you pay more for what the car is worth. You owe the bank more money than the car is worth. So to protect yourself from ending up owing on something you don't even have anymore because somebody hit you and now they pay what it's actually worth and now what you owe, this is why you need the gap insurance. Of course, you have to call your insurance agent and they'll explain you more in detail specifically for you how it works, but this just to give you a general information on how it works. Super important, because in this age it's so inconvenient if somebody hits you, or if you hit yourself, because sometimes you, like, let's say, you hit a deer or you hit a tree, or you avoid the deer and hit the tree and destroy your car. This is when it takes effect, things like that. But people, usually it's just like a wreck and they just restore your car to its previous condition. Not everybody, well, a lot of people do destroy the car completely. They mangle the car and it's towed completely. But most fender benders are just that, fender benders. They get put back, fix the vehicle and put it back in order, and there's no need to replace the whole vehicle itself. You only notice your lack of insurance when you don't have it and this happens to you. So don't let this happen to you. And nowadays cars are super expensive. You don't want to have a loan, owe money on something you're no longer going to have. So don't think that because somebody hit you, they're going to have to pay you the whole amount you owe the bank. That is not how it works. They're going to pay you on what the car is value, okay? And not emotional value, but financial value, especially in this day, like with vehicles that don't hold their value, because every time you're driving the car, that car is losing value. It's not like a property where it holds, and it's an asset, a long term. I hope this has helped you. Till next time.